And it's not this
prelude to everyone here. Gordon said, you look in this first. I don't know anything about Ethereum. And here he is just blowing everyone away again. So thanks for making me look bad again, Gordon.
You're welcome.
Welcome to the Bitcoin Basics podcast with your hosts, Faris and Gordon from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our disclaimer. Visit BitcoinBasicsPodcast.com to subscribe and discover other free content.
Good morning, good afternoon, good evening, everyone. Welcome to another Bitcoin Basics podcast with your host, Gordon. That's me, and I have my partner in crime, Faris, with me as usual. Before we get started, let's do our proof recording. So today is March the 30th, 2021. The current price of Bitcoin is $57,420 and the current block height or block number of the Bitcoin blockchain is 676,941. And Faris, I'm going to introduce a new stat just for today's episode. The current max or the total max supply of Bitcoin is 21 million Bitcoins. And the total current supply at the moment is 18.86 million Bitcoins. The total supply of Ethereum is 115 million. And the max supply, according to CoinMarketCap, has a question mark. So today we're discussing Ethereum. But before we start, Faris, this prompted your interest. Why are we talking about Ethereum?
If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself.
So Ethereum is making headlines in the investment world. A few people that we've interviewed, like Raoul Pal we had on here recently, a few other people in Twitterverse are talking about Ethereum. The reason they're talking about it is because Ethereum is about to launch what's called Ethereum 2.0. So I listened to a podcast with Vitalik Buterin. He's a creator of Ethereum. This was a 2-hour podcast, and admittedly I only got an hour through it. But essentially, so when I first started learning about Bitcoin, this was 2016-17, it was one of those things where I learned the details in the sausage. And as they say, you don't really want to know how the sausage is made. And I probably learned too much. And there were these debates in Bitcoin about scaling, basically in that Bitcoin was slow because it took 10 to 20 minutes on average to process a transaction. Whereas Ethereum and Ripple could do it in seconds. They were compared to the Visa. So they're saying that, Bitcoin is too slow, but Ethereum and Ripple can do things faster. But as Gordon just mentioned, it's not just the fact that there's an unlimited supply of Ethereum. But essentially the problem that you have with Ethereum is the size of the, let's just call it the database. So if you wanted to download the Bitcoin blockchain, it's about 330 gigs, I think at the moment. Last time I checked, it's around that. So 330 gigs is a lot, but you could download that pretty quickly today. It wouldn't take long. Most people, have terabyte computers. Ethereum, you can't do that. It's huge. So Ethereum, even though it's fast, they've got what they call the scaling problem. So Bitcoin has tackled the scaling problem. We'll talk about that a bit more later. Well, we will allude to it. We'll talk about it in this episode. But people are like, well, how's Ethereum going to scale? So that's one thing that Ethereum 2.0 is supposed to do, is tackle this scaling solution. But I think the basic question is, what is the difference between Ethereum and Bitcoin? And there was a good analogy used, which I'll get you to explain a bit more, Gordon. But essentially, someone explained Bitcoin as, so Vitalik and Naval on the show, Naval Ravikant, explained Bitcoin as an Excel spreadsheet, whereas Ethereum is an Excel spreadsheet with macros. So before I talk a bit more about that, can you tell us, because I've seen this pop up on Excel spreadsheets, macros. Can you tell us what the hell are macros on an Excel spreadsheet, Gordon?
I think that's a terrible example, a spreadsheet. But anyway, macros are just pieces of code or sort of things that you can add to a spreadsheet to give it extra functionality outside of, say, for example, if you're using Microsoft Excel. So a normal spreadsheet can do, calculations and equations based on different cells and different numbers. But a macro is something that, for example, if you wanted to retrieve an additional data source, you had a spreadsheet and you wanted to know the current price of the US dollar or Australian dollar or Japanese yen. Instead of copying and pasting those, obviously manually can't do that. You could install a macro, download a macro that got Forex prices from an external data source and put it automatically into your spreadsheet.
Yeah. So I know like Google and I use Apple numbers do the same thing. So if you haven't picked up by this already, Gordon is the PC guy. I prefer Apple products. To me, I believe there is not just a very stiff correlation, but a causation between the launch of Microsoft products and the suicide rates. So I think, using Microsoft makes you want to kill yourself. That is scientifically proven, in my opinion. So anyways, back to Bitcoin and Ethereum.
When have I ever been a Microsoft guy? I'm not sure.
You're an Android guy. It's the same thing as I don't know.
Linux. Hello. Yeah.
Oh, that's true. Anyways. All right. Well, I was trying to be funny. What was I talking about? Yeah. So Bitcoin. So the thing I liked about here, what they explained in this, and this is the way Gordon's explained Ethereum to me, is that developers like Ethereum. And this is why I hate Microsoft, because to me, I just need things to do, simple. I open up Word, I open up Excel on Microsoft, and there's 18,000 different options. I need maybe 7. And I don't need all those options. All those options are there for developers doing complex things. I just want to write a document or run a basic spreadsheet. I don't need all these options filling up my screen. That's what Ethereum is there for. So what they explain in the show is that where Bitcoin is just a payment solution. So let's say, for example, you wanted to run a private transaction. You can't do that on Bitcoin, but someone can make a separate coin like Monero or Zcash or Dash, whichever one of those was a private one. If you wanted to get involved in, say, putting deeds to property on the blockchain, you can't really do that directly with Bitcoin. You have to go and launch a separate coin, a separate token. So what was happening 2016, 2017, Bitcoin was basically like a Swiss bank account. It was like gold. It served one purpose, to store wealth. If you wanted to do separate things, you would have to create a separate coin that was based on the technology of the blockchain. With Ethereum, what they're saying is you can do all that on Ethereum. So rather than going and creating a separate blockchain that has a separate purpose, Ethereum does what's called smart contracts, where on the Ethereum blockchain, you can add in, create this whole new contract. So that's why Ethereum has a scaling problem, because they're building on top of the layer 1 chain. So, and they went on to talk about how payment processing on Ethereum is a lot faster. Well, Bitcoin tackled that, and I'd refer to our episode where we talk about the Lightning Network. Basically, Bitcoin was slow, but they figured out a way of keeping layer 1 secure and making payment channels faster. So the main thing that Ethereum offers is it is a tool for developers to say, this is what we can do, and you put it on the Ethereum chain. As I said, I only got halfway through this interview, and Vitalik started to explain what Ethereum 2.0 is going to look like. And it's going to be a combination of layer 1 and layer 2. So layer 1 is keep making the blockchain bigger. Layer 2 is side chains as well. So I think there is some buzz in the investment community saying we're about to launch Ethereum 2.0. If it's successful, Ethereum could go from $2,000 to $10,000 very quickly. So that's where the narrative is at now. It is a speculation. It's kind of like investing in a company before earnings are due. If you're expecting earnings to do really, really well, and they do even better than you're expecting, and you're in early, you see the price go up. So that's kind of why we're talking about Ethereum now, because there is some buzz about it in the community.
Do you have a question about Bitcoin? Coincompass.com/ask to record your question, and we'll answer it on an upcoming episode. So whether your question is technical, non-technical, economic, political, fundamental, it doesn't matter. There is no question too basic or too complicated for the Bitcoin Basics podcast. Coincompass.com/ask.
So with that, Gordon, what is your take on Ethereum scalability?
You mentioned several things there, Faris, and I'm going to completely ignore your horrible analogy to do with operating systems, because Apple's a white-collar prison. Linux is kind of like you're living in the jungle, so you could definitely be killed by tigers, but you have ultimate freedom. And Microsoft is, I don't know, maybe it's a state-run prison. I don't really have a good analogy for that. So in terms of technical differences, I think we could talk all day about the differences between Bitcoin and Ethereum. And in doing this, I did some research and whatnot, but I don't really think that's useful because you've got two different purposes. And a lot of people compare Ethereum and Bitcoin, oh, it's like Coke and Pepsi, got different flavors, but actually it's not. It's, comparing, say, Coke and beer. They're two different things with two different purposes. And also, I mean, what is your perspective? Is your perspective as a long-term investor? Is your perspective as an IT guy or a programmer who wants to build apps and, become employable? Or is your perspective for some short-term gains and speculation? They're three completely different things. And the answer to some of them might be Bitcoin and the answer to others is Ethereum. So to keep this podcast short, because we could talk forever, I really think the technical differences aren't that they're worth talking about. And they might be interesting, but you're kind of comparing a tank with a Ferrari. At the end of the day, different purposes. And if you're looking at investing, and I made a sarcastic remark at the very start of the episode about the max supply, it really does come down to, well, which is the heart of money? And Bitcoin 21 million is the heart of money. Ethereum supply at the moment is 115 million, but I mean, who knows? When Ethereum was launched in 2015, 60%, or 100% at that time was crowdfunded and basically what is called pre-mined. Bitcoin started from a Genesis block 0. Anyone could mine Bitcoin. So a lot of Bitcoiners call Ethereum a scam for that reason. I'm not against crowdfunding, but today something like 60% of Ethereum is owned by the co-founders, by the Ethereum Foundation. So that point alone, and the fact that you don't know what the current or the max supply is going to be, I don't think makes Ethereum a good investment. And we can talk till the cows come home about scaling and version 2.0 and all these upgrades and stuff like that. But it's kind of meaningless because if I'm to be blunt, and by the way, I do like Ethereum, the technology and some of the blockchain projects they're doing. But if we're comparing apples with apples and we're comparing blockchains and blockchains, you look at the main attributes of a blockchain and you look at centralization and decentralization. Ethereum is not decentralized, and it's not decentralized for two reasons. One, the CIA, the NSA, SEC, whoever could call up Vitalik and say, stop that Ethereum thing, or the Ethereum Foundation. It could certainly target certain developers, to stop them. And there's sort of a real world legal jurisdiction that could happen there. Also, as you mentioned, Faris, to run a Ethereum full node, let alone their archive node, you need 4 terabytes of data, a hard drive with more than 4 terabytes, and a really fast CPU. So you're talking about a computer of at least $3,000. You can run Bitcoin on a $5, $10 computer or an old computer sitting in a garage, maybe with a small upgrade to the hard drive. So that means Ethereum is not, I wouldn't say centralized, but it's definitely not as decentralized as Bitcoin. And that has the effect of, well, it can be controlled. The second thing is it's not transparent. A lot of these digital apps, or what we call dApps, they run on these fancy websites or mobile phone apps, whatever, but they don't actually interact with the blockchain directly. So you may be using a finance app or a game or anything, but you're not actually dealing with the Ethereum blockchain directly. You're dealing with a database. Because the Ethereum blockchain cannot scale and it has got too many transactions, what developers do is they actually create a database to basically suck the Ethereum blockchain into it. And then when you're using a website or a dApp with Ethereum, you're actually interfacing with that database, not the Ethereum blockchain. And thirdly, and I would say probably the most significant difference is Ethereum's been rolled back. And I know Ethereum people hate that, but there was something called a distributed autonomous organization, a DAO. in 2015, 2016, where a lot of people lost their money. And the Ethereum blockchain was rolled back. And you can argue whether that was a good thing or a bad thing, and whether saving people from losing their money. I personally think it's good for people to touch the stove, because then they kind of understand that maybe they shouldn't touch the stove. But the Ethereum blockchain was rolled back. So even though that happened once, it might not happen again. Just that lack of confidence that something like that could be done in the future, and it is highly centralized amongst a few developers, means that, I'm sorry, Ethereum is not immutable.
Yeah, and that's another point that Honor raised. Like recently, we saw with Ripple how they got pulled up from the SEC, basically saying you're not a decentralized cryptocurrency, you're a company, and they might get not fined, but pursued for back taxes and all this kind of stuff. And we saw the price of Ripple just drop. The exact same thing can happen with Ethereum. By the time Bitcoin gets coined, you guys aren't a company, you need to be registered. So, yeah. Now just prelude to everyone here. Gordon said, "You look in this first. I don't know anything about Ethereum," and here he is, just blowing everyone away again. So thanks for making me look bad again, Gordon.
You're welcome. And so last one, you mentioned a lot of things. We could talk about Ethereum 2.0 and scaling, whatever. It's not really version 2. If we're honest, and even Vitalik said that it really is a do-over. It's not an upgrade like Mac or Windows to your operating system. It's actually using a whole new design, a whole new chain, and it's basically moving Ethereum 1.0 onto Ethereum 2.0. So it's not an upgrade. And I think that's actually quite disingenuous to call it an upgrade. It is a do-over. And that's fine. If you've got an app on the App Store or Android store, you've got a website or whatever, you have a new version. That's fine. You fix bugs or whatever. We're not talking about software. We're talking about money. I know blockchains are software. But, to basically admit defeat and saying, well, the first version didn't really work out. Let's just try, we'll just call it Ethereum 2.0, but actually it's a completely new technology. And we don't have to get into the failures of them moving away from Bitcoin's proof of work to something called a proof of stake, which I think will be a security disaster. That's a whole nother topic, which we could talk about another time. But yeah, it's hype. And again, what is your perspective? You could probably make some really good short-term gains speculating on Ethereum. But is it hard money? No. And I'll quote to you two things that Vitalik has said, and you can look at the ethereum.org website for this. In 2019, this is what Vitalik said. Ether absolutely can be money if the community wants it to be. And then in 2021, he said, I do think that the Ethereum community wants ETH to be sound money. So one of the founders, co-creators of Ethereum basically admitted that Ethereum is not sound money. It's not hound money, but it could be if I decide that we want it to be.
Yeah, that's an argument for another day, because we could say the same thing about Bitcoin. So anyways, we'll have that conversation another day. Let's try and invite Vitalik on, and let's do so before he listens to this interview.
Yeah, absolutely. And so I think we need to separate the technical differences from the economic differences. And you could argue that Ethereum is a more exciting, innovative, faster growing technology than Bitcoin. And I do think it is. But in terms of an investment, a sound investment for your retirement, for your long-term savings, it's not hard money. And the founder of Ethereum has admitted that. So that may be an annoying answer. But, a lot of people use this analogy that Bitcoin is gold and Ethereum is oil or petroleum, gas. And so in terms of usability and functionality, Ethereum definitely has more functionality than Bitcoin. There's no arguing that. There is so much happening on the Ethereum network. And in the past, we had ICOs, we had NFTs, and now we've got DeFi, decentralized finance, and all this sort of stuff. And next year it'll be something else. That's exciting. It really is. And you've got, X on the blockchain. But if you're looking at investing, I don't think you can go past the hardest money, and that's Bitcoin. There'll only be 21 million. That won't change. And that inflation, it can't get inflated away. So I think that fact, and it hasn't been rolled back and it won't be rolled back. I think that fact alone pretty much answers the question.
Yeah. I agree wholeheartedly, but yeah, we have more conversations about this, and I think we should. All right, that's it from me. Gordon, you have anything else you want to add? You always have to get the last word in, so
I always do, and Ethereum has moved its narrative from being a world computer to now it's a smart contract platform, and that's a really interesting idea. I'm not saying it's not. Nick Szabo was actually the first one to mention this notion of smart contracts, but smart contracts are neither smart nor a contract because they're just pieces of code and they're not enforceable in the real world. So a lot of people get excited when they put, title deeds of apartments on the blockchain or university degrees on the blockchain or this on that. And it's like, well, that's great. But you come to a judge and just say, here's the Ethereum link to my title deed of my house. That's not really going to fly. So not saying that shouldn't be pursued. And there are people trying to get the legal requirements and certain laws around the world sort of up to date. But I mean, we're basically got the problem in that we're trying to reinvent the wheel. We're trying to make everything that's analog in the real world onto the digital world, onto the blockchain. Yeah. And some things we don't live on the blockchain. The reason why Bitcoin is successful is because there's no real world input. Every single Bitcoin transaction basically is pure mathematics. Whereas with all this thing that we put on the blockchain, you've got this real world input, which means there could be errors and corruption or whatever. So we've discussed that before. So I would say interesting project, Faris. Ethereum is super interesting. It's the number 2 coin. Could it potentially give you more gains and more profit than Bitcoin? Maybe, but it's definitely not sounder money. So invest in gold, don't invest in oil.
Okay. So
fair enough.
Thank you for listening, everyone. And Gordon, where do you want to send people today if they made it to the end of this podcast?
I want you to have the last word, Faris. Should someone listening to this, maybe they've got a bit of Bitcoin, should they invest in Ethereum?
I wouldn't. If you're speculating, even then, and in all fairness, I did have a long Ethereum position, which I closed out a few weeks ago. I thought the percentage increase in Ethereum was going to do greater than Bitcoin, but it didn't. And if you look at the charts, they're very similar at the moment. Best way to gauge is you can compare Bitcoin US dollar versus Ethereum US dollar, but actually just go to TradingView and do type in ETH-BTC, and that's the price of Ethereum against the price of Bitcoin, and it's just going straight down.
I was going to mention that at the start of the show and show a graph, because you can look at any altcoin, pretty much anything in the top 20 against USD, and it's going up. So everything's going up. But if you compare Ethereum versus Bitcoin, it's actually, as you said, it's going down. So why would you invest in it? Just invest in Bitcoin.
Yeah, Bitcoin is the whale. Everything else is the plankton.
Okay, I'll leave it at that. Thanks for watching and listening. Visit bitcoinbasicspodcast.com. You can find access to all our social media platforms, podcast, YouTube channel. You can also ask us a question. And we do have an upcoming Q&A. So coincompass.com/ask if you want to have your question answered on an upcoming episode. So please share and like this. It sort of helps spread the word to other people like yourself to get Bitcoin education out there. Thanks, Faris, and we'll see you in the next episode.
Thanks, everyone.
Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.